The Dow formed a Doji day using the 50-day moving average as support and did a lot of consolidating, which is not unusual after a big reversal move like this. And the trend analysis becomes very simple. The simple rule of the Doji allows us to see which way they're planning to take this market. It'll move in the direction of how they open it tomorrow. Both the Dow and the S&P 500 had the same type of chart, which means if the pre-market futures are showing positive tomorrow, where we should be in an uptrend. However, the Nasdaq showed a bearish engulfing signal, even though it's not in the overbought area. But more importantly, it showed that it failed at the 50 and closed below the T-line, which would also imply that this big rounding top is still in progress. So there's still some doubt as to whether there is a strong bullish move in the process. Unless this signal gets negated tomorrow by a strong move that takes the Nasdaq up through the 50, the uptrend, if there is any uptrend, may be very lethargic. And there's still simple identification of charts that are acting bullish, as in our recommendation on G-Pro. We've had the J-hook and another J-hook. Notice how it hasn't been able to close below the T-line, and they were traded up pretty positive today. This allows us to be long in positions in a portfolio, as well as being short other charts that have shown strong bearish patterns, such as our recommendation to be short on CRE. The advantage of candlestick analysis is that it visually shows you what's going on in investor sentiment, and if that investor sentiment can't be fully analyzed as far as what the overall trend is doing, having the ability to see which charts to be short and which charts to be long still puts an investor in a position where they can be making very good profits in a sideways or lethargic market trading. That'll be it. We'll see you in the chat rooms.